Hey folks, I'm DrJ from Trade Monster. This is Futures Monster, Danny Riley.
That's me.
And from his new perch up here above the CME, let us know how you like it and so forth. I got to go over and film something for CNBC.
Thanks,
Good luck,
John.
Danny.
Thanks. You know, now we've got the whole floor to look at, and I think that this is a much better perspective of what we're going to be talking about in the future as we try and enhance our Mr. Top Step forum. You know, as far as the trade went here today, you know, the market opened at about 6 o'clock in the morning, 6 a.m. this morning. The S&P was down about 6.5 handles. When we went into the 7:30 production and cost numbers, the S&P, those numbers came in sharply lower, and the S&P ducked down about 11 handles. We closed at about the 1125 level and opened up at the 1115 to 1115.20 level, and then the S&P went into a nosedive before the 9 o'clock number, all the way down to the 1108 half level, which was one of our support levels that we talked about on the IM this morning. After that low came out, we came out saying that we thought that with the market down over 16 handles, the very basic stuff that we kind of talk about sometimes, is that after the market was down 16 handles and we were only, you know, 35 or 40 minutes into the day, knowing that we're going into a Fed meeting today, that more than likely the market would start to taper off and drift forward, and that's exactly what's happened. The market got back up to about 1115 even, which tested the opening range and then sold back a little bit. Now, as far as volumes are concerned in the day session, again, you know, we hate to beat on this drum, but when you break down these volumes, we're not seeing very much. We came in with about 280,000 on the board pre-open, and right now we have about 900,000 minis traded, meaning we have about 600,000 minis traded at this time of the day. That is not particularly a very good number. But that said, this is a normal course of the way things go during a Fed meeting. You know, we have a little rule, and it's one of them that we say that, you know, you can come in at 12 o'clock on the day of a Fed meeting because generally nothing happens. Well, this morning we did have a little bit of a down move, and we've had a little move back up. Now we're waiting on the Fed. As far as what we think the Fed is going to do, they're not going to do anything. We think the way these numbers are coming out right now, it would be impossible for the Fed to bring rates up in any fashion whatsoever. Now, there is some stuff going on at Goldman that said maybe there will be some movement in the next quarter for that. But as far as what we're seeing, we're not thinking anything like that right now. What we are thinking is that the market has digested a lot of bad news over the last couple weeks, and it's still right up near its highs. In the short run for today, we kind of think that the equity report that the desk wrote said that they thought that you should sell rallies in the first part of the day, wait for a little bit of a short covering rally into the middle of the day, and then wait to see what the Fed does. Now, a lot of times what happens in the S&P is after the Fed will make its announcement, the market will move sharply in one direction and then move back the other. We call that a head fake, and what we're going to be looking for today is if the market jumps up real quick, we may be leaning to selling that rally, or if it pops down real quick, we may be looking to buy that break. Either way, you know what, we're coming into the end of the week. Today's the Fed day, and then the rest of the week will be geared toward the S&P July expiration. Now, historically, the first 9 days of the trading month in August are not very good. But that said, we've had a lot of positive days throughout the month. What we're looking for now is to find out if some of those historical stats will show up with the market in front of the expiration, which the expiration stats or the expiration study for the July expiration showed mostly as an up week. We'll be back tomorrow with another update.